This is the first trading day of the month. So these charts could not be fresher. So we're just going to walk through some of the more interesting ones, comment, talk about it. Some of them will linger on. Some of them will go right by. First one is the equally weighted S&P and the market cap weighted S&P. These are monthly candles going back to 2017. JC, go.
Yeah, I mean, listen, let's remember why I get so excited about it. It's easy for us to get lost in the noise. What did the market do today? The Nvidia, the Fed, and, the Dow, and, wars and interest rates. And there's always something, right? These monthly charts, you only get one data point a month. So it brings you back home, right? Like it brings you back to the primary trend. At the end of the day, this podcast is called Trends with Friends, right? The reason that we're doing that is because asset prices trend. We know that. So if you are able to identify the direction of those primary trends, you are going to have a huge advantage over those who are constantly trying to fight them, right? And so as they say, the trend is your friend with benefits. The benefits are the profits, right? So here we are, you're looking at the S&P 500 on a market cap weighted basis, traditional, making new all-time highs, but also on an equally weighted basis where you are now eliminating that top heavy, that Mag 7 or whatever they call it these days. It used to be like the Fab 4, I think it used to be called, and there was like a FANG before that. It was like research in motion. Like there's always some sort of silly thing. At the end of the day, it was never 6 or 7 stocks. That was never the case at all. Anybody who ever said that never bothered to go and look, because if they would have seen that was never the case at all. And this just further reiterates that it's broad strength. So if you want to just keep going, there's several points here worth making. Utilities are making new all-time highs. Highest monthly close ever for Utes. Highest monthly close ever for consumer staples. New 52-week highs for REITs. A lot of more defensive areas are making new highs. So is that, there's a defensive rotation? Or is it really more of just a function of the fact that it's a bull market and those stocks go up in bull markets also, right? And as it turns out, when you go and study every bull market ever, consumer staple stocks do well. So do utilities, so do REITs, because they're stocks at the end of the day.
Isn't it just more that those stocks go down less when the high beta stocks get hit hard?
Yeah, sometimes. By the way, from 2003 to 2007, which was a tremendous bull market, utilities were the leader. Utilities were leaders that whole time, outperformed the entire time. So if you go back to the last chart where you can see the 4-pane, you're looking at financials, industrials, materials, healthcare, all making new all-time highs. So if it was just utilities and staples and maybe REITs, that would be one thing. But it's not that at all. It's financials, it's industrials, it's materials, it's healthcare. And people are like, well, healthcare is a little defensive. Yeah, maybe. Healthcare is also the second largest weighting in the S&P 500 after technology. It's the third largest weighting in the Dow Jones Industrial Average. And that kind of changes back and forth. Statistically, top 3. In fact, United Healthcare is the largest component of the Dow Jones Industrial Average. So even healthcare that might have a more defensive tilt is still a huge weighting in the United States. Not in Canada. It's 0 in Canada. But somewhere like Denmark, it's also huge. In other areas around the world, healthcare is huge. Certainly in the United States, we can't ignore that because it has a defensive tilt. All of these areas are making new all-time highs.